Looks like we lost them though.
Yeah, I don't know if I didn't know if we were taking a picture or what was going on.
You didn't lose me. Well, good afternoon, everyone, and welcome once again to the KoreSummit Webinar Series 2021. And just to remind everyone, yes, we are exactly 5 days away from the big day. That's right, March the 15th, when we can go live and raise up to 75 million with Reg A and, of course, 5 million with Reg CF. So lots of work to be done. And finally, we get to have the discussion that we're going to have this afternoon that wasn't available years ago in a meaningful manner, meaning it's real, it's live, and we're going to have that today. So two great guests. We've had them before, but I want them to introduce themselves. Please, Elliot, if you can start us off.
Hey everyone, how you doing? Happy March 2021. Elliot Chun here, Managing Director at Wield & Co., lead the Emergence team, which is the emerging technology and digital asset and impact group under the Wield & Co. banner. And for those that don't know, David Wield, who founded Wield & Co., a lot of his writings went to become the foundation for the Jobs Act, which led to Reg CF and Reg A+. And so happy to be here today to talk about an excellent topic on what these new regulations have paved the way for.
I like that. You know, thank you. And you know, I told him that I have you on recorded. I mentioned it today. So this is now 3 times. Thank you. You know what? When it's due to those who got us here. And of course, my other colleague, it seems like I just saw you just a little bit. Jake, please.
And once again, Oscar, I appreciate the time as always. My name is Jake Gallagher. I'm a Director of Private Secondaries here at North Capital and the PPXX platform by North Capital. You know, we've been a boutique investment banking firm in the space now for the better part of a decade, and we've expanded into the secondaries market for Reg A, Reg D, and various other exemptions. Yeah, and as always, we're looking forward to the presentation today.
Well, it's not my presentation, actually, Jake. It's all going to be about the two of you because, man, did I come with questions. You know, the exciting thing about what happens here is that we get to listen to people, and people often don't ask questions here. They wait till afterwards, and then they come. And nobody asked the basic question about, you know, we use acronyms and stuff. So today, it's not going to talk about how, you know, secondary market, who's it for, but how does it work? How does it work? I mean, I think this is a really important, and Jake, we're going to base it on the PPX model, okay? So we're going to make it fair. This way, we're going to put Elliot off. He wasn't ready for that. I didn't prepare him. I told him we were going to do something separate. So this way, he can be a little bit off. But and the reason we're going to do that for you is because I don't want to put you on an environment where it's different than the way you operate. So I want people to learn about how an ATS works from the perspective of PPX all the way through. So I want us to go, but let's start right off the top, and I'm going to give this one to Elliot. What is ATS, and why are we using ATS in one sentence, and then we're using the word secondary market? Somebody asked me that the other day, and I didn't have an answer. So I'm asking you, as a broker-dealer, what do these two things mean? Are they both the same, or are they defining something totally different?
Yeah, well, so from our perspective, a ATS, alternative trading system, is a subset of secondary market, right? Secondary market, broadly defined, is after the primary issuance, or the first time a issuer taps capital markets in a specific capital raising event. They are raising directly from private investors. That's your primary issuance. Typically, or before a lot of the innovations that we have today, private investors were required to hold on to their investments until there was some sort of exit event. And typically that was an IPO in the public markets, some M&A activity where there was an acquirer into the space. And there was really no options for a private investor to be able to sell their position. And so the whole concept of secondary markets came when we had a very manual type scenario where you would pick up the phone and say, hey, I saw someone was a private investor. I'd love to offer you a certain price for your shares in this company. And all of that would happen in a very opaque, misty gray area of secondary market activity. And not much was done in a regulated way. Not much was done in terms of kind of rules and regulations for facilitating investors in current private transactions for them to kind of get out of their position. And now we fast forward into 2021, and we have the opportunity to operate with alternative trading systems that are facilitating a more familiar transaction methodology, transaction kind of process for investors. And it's mirrors similar to how equity markets are run today, which is one of the great benefits of innovation, of regulation, and what positions us to have secondary market activity through alternative trading systems for private companies.
You know, I have to, this is really interesting. So I learned something today. So secondary market is the heading and ATS is just one of the elements. There could be other forms, and that's it. You know, that's a good thing. You know, it's funny. I hear the words interchangeably, and this is, you know, it's like everything else. We're leveling it up one more step. So thank you for that. That was extremely helpful for me as well. So, okay, so we now know it's an ATS, right? And PPX operates an ATS to allow secondary market trading of private exempt securities in the marketplace. So, you know, the floor is yours, Jake, because let's start it. I mean, how it works from PPX high level, and then we'll deep dive a little bit, interjecting with Elliot there. Okay.
Yeah, no, absolutely. Yeah, and I think Elliot did a fine job there kind of summarizing the big differences between just the broader secondary markets and then the kind of niche section that we're carving out with the alternative trading system. So the way the PPEX as a platform works is right now it is mainly, it is an institutional platform. And I should clarify that by saying that your everyday retail investors, high net worth, accredited investors, Reg A plus, Reg CF investors can't access it. They just have to access it through an institutional partner like a broker dealer. And so, you know, when an issuer launches a Reg A plus offering, a lot of those are run through a broker dealer. And so we are partnering with various broker dealers that are active in the Reg A market to provide them access to an alternative trading system to help facilitate secondary transactions with their current investors. So for instance, we've got groups that are, you know, their model is raising money through Reg A capital raises. They've got a group of investors. Some groups have grown their investor groups to, 3, 4, 5, 10,000 investors. And there are times where those investors may or may not need liquidity for one reason or another. And so instead of, having them route directly through PPX by going to ppx.com and trying to log in, create a profile, and place a trade, that issuer is already partnered with a broker dealer, and then we have a partnership with the broker dealer and are able to route those trades through the broker to the ATS via our API calls in our API system. And so it is an institutional only platform to an extent that retail investors can still access it kind of indirectly through an institutional platform like a broker dealer. And then we also have your traditional institutional investors that are onboarding as well, in terms of, you know, your hedge funds, private equity firms, VC firms, and so forth.
Okay, so there are two sides to any trading, right? So
That's
there is
correct.
the seller, and so now I get it. So the seller, the way PPX works, it's BDs on both sides, right? Did I get that right?
That's
Okay,
correct.
good.
Whether it's North Capital being the broker dealer to an institution, or if it's a broker that has direct access to the ATS. That's correct.
Okay, so and this is good. And the reason I'm recapping for the audience is I just want to make sure, because this is part of the educational phase. We want everybody coming in with their eyes wide open. There is no one right, wrong model. It's just that you need to know which of the models it is in order for you to onboard yourself properly, right? Because this is all about onboarding. Ultimately, I think I'll let Elliot speak because he's got this cool little terminology for this, but onboarding. So, but it's imperative for them to recognize that the broker dealer, so there's some communications that need to happen between the broker dealer, the issuer, to the investors. What about on the other side? On the other side, there's a broker dealer as well that needs to represent the buyer, correct? And that buyer, could that be an individual buyer, or does it always mean I recognize it's an institutional buyer, but can it be an individual buyer?
It could very well be an individual buyer.
Okay.
And the reason why we designed it like this is because, you know, a lot of, you know, in these initial capital raises, you know, there's great relationships built on that primary issuance. And so there's a great relationship built between the broker and the issuer. And we wanted to provide an avenue so that relationship wasn't disrupted. It was just built upon via our API, so the broker could access the ATS in order to facilitate those secondary trades, instead of trying to establish brand new, you know, relationships directly with the ATS, if that makes sense.
No, it does. And you're the broker dealer, Elliot. So tell me, I mean, you're now the BD, you're with Wilco, you're now managing my trade, right? I come to you, and as he said, this is not to disrupt the relationship between you and the client. You know, how do you foresee that happening with your environment, the way you guys operate to onboard yourself into the PPX and to work through that flow? Because I'm still the individual, right?
I appreciate the model because it is a baby step from what people are familiar with today, and particularly in publicly traded securities, right? So generally speaking, if I'm an investor in public equities today, I have a brokerage account. Name any of the household names that you want. And so through that brokerage account, I'm able to go and access and purchase positions or an equity position into publicly traded companies. This is a very familiar model, because the only difference here is that we're applying that flow from different actors in the publicly traded equity situation into the private equity situation. And so there's a lot of familiarity in the process, right? Versus, you know, today the onus is in the non-PPEX model, the onus is on me as an investor who is buying a Reg A position through a ATS. I have to do that on my own. I have to go and navigate what that flow and process looks like. And I don't have to have a broker dealer that is helping me through it when I need it. And there are significant benefits to having a broker dealer play a role in that process on both ends. And so, and we can name a lot of them, but the number one thing is, if I make a mistake, who do I go and call? Right? Today, if you make a mistake on a trade, you can pick up the phone and call someone, ideally, right? If you flip it to the other side, are you calling the ATS? Are you calling the issuer? You didn't use a broker as an investor. You didn't use a broker to make the trade. So who are you calling if you made a mistake, right? And so, as people get more and more familiar with this process, I think having a very familiar process, i.e. having a broker dealer with you along each step of this, can be very, very valuable and very helpful from an education perspective, as well as a execution perspective.
Okay, and 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 if I understand correctly from the PPX model ATS, is that PPX is purely onboarding the broker dealer, the institutional element of it. You're leaving the individual investor needs to be onboarded by the broker dealer. I got that correctly. And for the issuer isn't coming to you. The issuer has to come through the broker dealer as well.
Well, yes and no. So for new issuers, for instance, we'll still, as the ATS, we'll still want to perform due diligence on them, and a lot of that due diligence is captured by the broker dealer on the primary issuance. So that certainly makes it a lot easier. At the end of the day, we still want to perform and approve the security to be listed and traded on the ATS. So it's kind of with the issuer, it's kind of a multi-approach, or kind of two ways. You'll want to get on with the broker, but you also need to get approved by the ATS as well. But by working with the broker on the initial raise, that obviously makes the due diligence process a lot easier for us as an ATS.
Got it. Okay, so the issuer in this case is onboarding with you, and will most likely onboard with the broker dealer at the same time, because the BD has its own. And then, of course, through that onboarding process, that's when the BD, Elliot, you become aware of the shareholders that you can now represent to assist them in placing their securities on the PPX platform. So that's one phase. Did I pretty nailed that? And okay, so that's phase one. And then, of course, phase two on the other side, there is a BD, there is a buyer. If an individual buyer comes, again, what I'm trying to do here is making sure people understand that the reason why nobody's allowing you to knock on their door, or you're knocking, nobody's listening, is because you need to be talking to another party. Should they be looking for a broker dealer to find, or would you be listing broker dealers that they can connect with to help them make a purchase? Like, how does it work on the buyer side?
That's a great question. And so if it's for instance, I mean, on our primary issuance business, we are the broker on a number of transactions. And so if it is an investor of one of those offerings, and we still have that existing relationship with the issuer, we as the broker can help facilitate those transactions directly with the end investor. But depending on the issuer, we would refer that out to other brokers as well. And so it really kind of depends on the specific use case, but yeah, we, with a lot of issuers that are looking to onboard that, don't necessarily have, they're not working currently with a broker. We have looked to make referrals out to other brokers to, to limit that direct to retail, exposure as the ATS, as we want to be as mainly institutional as possible.
Yeah, and the only way you can do that is by making sure that firms like Elliott's has deal flow to participate. Even though you're a broker dealer as well, you could do that. It only works with the more BDs are involved, right? I mean, that's exactly the key element. Okay.
Yeah, and we see the great value in it is by partnering with firms like Elliott's and really trying to create a larger network effect. I mean, at the end of the day, we believe we have a pretty great network, right? And we're continuing to expand that every day. But there's thousands of family offices and high net worth individuals and millions of investors that, we're just never going to be able to get to if we wanted to do it by ourselves. And we could, it's just going to take us a lot longer versus when we're building, mutually beneficial partnerships with firms like Elliott's and other BDs, it allows us to create that network effect much faster. And ultimately, we believe will, create more transparency and liquidity in the market.
which I think is a extremely important part to emphasize, particularly at these early stages of where our industry is, right? We need to work cooperatively in order to facilitate a stronger and more robust environment for secondary market transactions, whether or not they're ATS or not. And so the more and more that the thing I appreciate about the PPEX model is that it really is that network effect of being able to tap into the resources of other various regulated entities that are participating in this Reg A specifically process, in order to facilitate higher and increased participation from those that may not be familiar with what's happening in Reg A plus. And as the search for alpha continues, and that I think we downplay that a lot. And in this situation, it's important. Any institutional investor, their job is to generate alpha, full stop. People like to say, I manage risk. Okay, you manage risk. At the end of the day, an investor is paid to generate investment returns. And more, those of us that have transitioned from public securities into private markets are understanding that the opportunity to generate alpha is coming from investing into earlier stage private companies that have a institutional infrastructure that is surrounding it, which is what we're talking about now, which is why this area is so exciting, and why what PPEX has come up with, it could be extremely attractive as institutional investors seek to start investing earlier into the private investing process, yet be able to, one, if they do participate in primary issuances, be able to off-ramp their position or get access to their capital. Or on the flip side, there has been some maybe initial market validation, and that company is now, wow, that is something that we would want to participate in. Let me go through a regulated broker-dealer, access that opportunity through the PPX exchange, and now I'm doing it again in a very familiar process. It's not something that is that's newer, that you have to learn about. Hey, I'm executing, I'm shooting a message to my broker-dealer. That broker-dealer is going to help me get access to what is trading on the PPEX, get my order filled, and done in a way that's very familiar to institutions.
I'm going to go to the other side, and we hear this in the public side, but I don't want to make it kind of the public, but it's the way to shift the conversation, because we're in one side. I think it's pretty clear now, the onboarding when it comes to PPX or this type of model, which is an institutional grade type of ATS, is where the investor needs to go through the broker dealer. That's all great. Now it's on the other side. Like anybody else, people will want to list if there's also not so much a demand, but is there a market? So if it's an individual selling it, it's an individual buying it. Where is that? Like I'm not sure from an individual right now. Where do I go? Like I'm not a seller anymore. I'm not the seller. I'm just a buyer. So am I seeing what's available on the platform, and just like from outside that this company's there, that or these shares are available, or there's no visibility for me whatsoever? How do I get to know about it? How do I on the other side now? Or leave it to you, Jake.
Great question. So when you go to PPX, and you try to create a profile, we do collect some information on you, because right now we are issuing kind of seats one by one. And so the traditional retail investor can't access the platform directly as it is today. We are looking to expand that out. But right now, what we would say is, does your broker or is your broker currently tied in with the ATS, or who is your broker? And that would be our approach in the scenario where their broker isn't, tied in with the PPXX ATS. Then we would say, all right, that's terrific. What we can do is perhaps we would either look at the opportunity ourselves, or perhaps look to refer that out to another broker, like Wild & Co. or not, many of the other ones out there. And
okay,
that's the way it would typically happen.
Okay, so no, I knew that the individual themselves couldn't onboard, but I was just curious, because in order for someone to list, there's got to be a buyer, right? And then obviously the buyer would have to be, again, BD and all that to be able. So tell me the mechanics. Let's go through the mechanics now on the buy side. I think we kind of get the idea here that the BD needs to do their due diligence. What responsibilities are now being done on the other side? Obviously, to Elliot's point, if you're selling it yourself, there's no responsibility. I mean, you could make a mistake. Now you're buying. The representation that BD is doing, what are they having to do to make sure that that investment that's being presented, that share, that offer there is something you should be buying? What responsibilities does the BD have on that one, Elliot?
Well, ideally, if it's on PPXX, then the good news for the broker dealer on the buy side of the transaction is that there is a level of diligence that issuer has gone through to even be considered to be listed on PPXX, right? So that gives us as a broker dealer a good feeling that the issuer or the issue that is listed on the ATS is one that fits and meets regulatory requirements, right? And so I think that's part of the power here of what's been constructed, is that Reg A Plus has long been one of the regs that we assume that individuals want to participate in and would participate in. In this scenario, we're seeing, hey, there's going to be an environment for the more institutions to come in, and this is part of that institutional type offering that individuals can participate in and through. Jake, there's probably a couple of other things you may want to add on that.
Yeah, no, absolutely. And there's obviously, as the broker, you're going to make sure, there's, it's suitable for the investor, and, there's going to be a level of due diligence that kind of goes into not only, onboarding the issuer, but as they, are listed throughout the year and, renewing their issuance on the platform. For instance, with Reg A Plus securities in particular, blue sky compliance is a large factor in kind of keeping not only current investors but prospective investors up to date as much as possible. In here at PPX, we do have a partnership with a company called Guard. In full disclosure, we are investors in the company, and our CEO Jim Dowd is on the board at Guard. But what Guard does is they allow you to they really work with the issuer to be able to put all of their financials, all material information about the company into an easy, report in terms of up-to-date financials, and they help the issuers file with all 50 states to remain compliant under blue sky laws. Which is also another big factor in terms of, when the broker or when the investor is looking at investments, are these companies, remaining compliant past their initial capital raise. And so with Reg A Plus securities, they may use Guard, they may use another provider, but there would be a report available for Reg A Plus securities that investors would be able to access, as well as access to a lot of the public filings that are filed on the SEC Edgar site. That way prospective investors and current investors can stay up to date as up to date as possible on the financial health and well-being of the company.
Which is interesting to note, because if you go the other there's the other side of the Reg A plus spectrum, right? Which is you can have a scenario where you have an issuer that has not worked with a broker dealer on their issue. They are offering to sell their positions either on an ATS or not. But let's assume this, since we're talking one end of the spectrum, not on an ATS. And you can have a individual investor kind of walk up and potentially purchase directly from that issuer, right? So in that scenario, you don't have a broker dealer on the issuer side. You don't have a broker dealer on the buy side. Could there be things that don't go right in that transaction? And if they do, so yes, there could be. And if the answer is yes, something goes wrong, it's significant risk on the issuer side, it's significant risk on the investor side, and it's, quite frankly, it's just not the type of environment that I think many of us in this space want to have for both the issuer and the investor. There's just too much risk inherent in that, and I don't think that that's the right way for the industry to move forward. And so it's important to kind of note that that's what's happening on one spectrum as we're talking about this side of the spectrum in what Jake and PPXX have put together.
Please. No. Please continue.
I was just going to add on to that and just say, yeah, I mean, when you're involving multiple regulated parties in terms of the ATS and brokers on both sides of the transactions, you have a lot of licenses and a lot of careers that, that's their focus, is making sure things remain in compliance. And ultimately the goal of the PPXX platform and by building these partnerships with, brokers that are in good standing and clean records, our goal is to create as much trust in the private markets as possible. And kind of what, to Elliott's point earlier, is the secondary market up until really recently has been manual. It's been opaque. It's been, a large gray area. And there's been a lot of asymmetric information that's been out there. And by partnering with multiple regulated parties, we're hoping to, increase the transparency, increase the trust in the market and hopefully, create the liquidity that's needed.
It's pretty interesting. The whole idea behind this today for me was to really demystify what people's perception is, the way they speak of ATSs in secondary market, the way it's onboarded. There's a lot of misinformation out there. People speak in the terms of the individual investor without putting the caveat of, hey, yes, they can, but it's not the but the process is this following and this, because what it does, it confuses everyone, right? It's safe to say there's going to be different ATSs, different structured ATSs. This is an institutional grade ATS that has that additional layer. Well, I shouldn't say additional layer, just the way it works is through the institutions, and the institutions in this case, it's referring to the broker dealer. Is there another definition for institution other than broker dealer? You are defining the institution as the broker dealer, right? To be correct?
So they are among the institutional investors, absolutely. But in terms of other institutional investors, it's really anyone that manages, anyone that manages 50 million or more of assets, or is a bank or trust company, a savings and loan. There's a list of various criteria that could qualify you as an institutional investor. And so in this scenario, we are working with a lot of broker dealers that are onboarding the ATS to, and those are institutional investors, and then they'll obviously work with the underlying investors at the retail and high net worth market. And then we'll also work directly with your direct institutional investors, where they are, a GP that's making investments in on behalf of a fund, or it's, perhaps a pension or an endowment that's making an investment or selling an asset. And so those we're working with institutional investors across the spectrum. And then, you mentioned that there are other ATSs out there, and it kind of comes back to that network effect. Is we're also looking to expand and create partnerships with other ATSs, because our vision is that it's not a winners take all market. There's not going to be one winner that just wins everything. And so we think by partnering with other ATSs, it's just going to grow our network ultimately, maybe indirectly, but nonetheless, it's growing. And we think that's going to, once again, help provide that, that transparency and the ultimate liquidity in the market.
I agree. And I'm surprised at you, Elliot. I am. I'm just going to have a sip of coffee because I just can't believe you didn't go on him on the word liquidity. He went on me hard, Jake. I just wanted to let you know. He embedded in my head never to use that word ever again.
Well,
in fact, I had to cry to my wife what Elliot did to me. But and so
I did notice it, but the way Jake is using it is a little bit different, right? Because
okay, so please.
The intention for the market is to provide liquidity. That is where we are all driving to. We want to get to a place where we can use that term. Now, is it ever going to be a term used today for, the top Dow components, liquidity? No, right? But is it going to be used in a way where we can say, as a owner of a position, I can sell out of my position at a price that I deem generally around the market value of what one would expect? Yes, right? And getting into valuation and market is another thing, but facilitating an environment where a seller of a position can get out of that position in a reasonable band from a percent of where it's marked to where they execute out of. Yeah, that could be. It could be. We're building towards liquidity, right? We're not there yet. We've got a while to go.
But I told you, Jake, he made me cry. I want you to know. I have it on a video.
Not that it's available today.
There's a video, me crying, tears, just not to use it. In fact, I forced my entire team never to use that word again.
It's good. I won't use it either, unless we're talking about future state. But today, it's dangerous. Today, it's dangerous to use the term.
Yeah, no, I certainly agree with you on that. And full disclosure, obviously, we can never guarantee liquidity in any position.
Thank you for saying that. There you go.
Absolutely. And that's the goal. Is like we are working towards liquidity. I mean, that's ultimately our goal, is to create as much transparency, to create that transparency and liquidity. Obviously, we can never guarantee anything, and investors should very much understand that.
Yeah, it's important at this stage that I found that other webinar that we did, Elliot, very educational. I mean, it was, and I'm noticing our own team now. We're being very careful of people that say, look, there's a venue. It's not guaranteed, but there's a venue. That's it. There's now a venue. We never had that before. Like before, you had the exemption, but you didn't have the venue. Now we have the venue, and that's the exciting part. Then from the venue, we can start talking about maybe the next stage, as Elliot refers to the term off-ramping the investor, right? Where they get to monetize their investment in a secondary market. So I think this is the time now where clarity needs to come up, because I don't know about you guys, but I would say in the last 4 or 5 days, I probably received somewhere between 5 to 10 emails about ATS secondary market offering liquidity. And I know you, and that's what I mean. When you told me that, I'm glad Jake said it. You cannot guarantee it. You're providing the mechanism to bring these parties together, and they'll, if they transact, liquidity occurred. But if they don't transact, you're not on the hook for it. You're you're not there to guarantee that a transaction needs to happen. So, and this is just
even
to
look, if even when the U.S. stock market was just getting going on the New York Stock Exchange in the 1940s and 50s, there wasn't liquidity, right? I mean, things were trading at dollar plus spreads, and you were taking 50 cents, on a spread for commission, right? So,
yeah.
the exciting thing that you'd said is there's the venues now, which is, again, the importance is to be able to provide a sense of familiarity to what works today. And what works today from an public equity markets perspective, the private markets have never been able to provide. We just haven't been able to do it. But now we have the venue, as you say. We're talking with one of the top ones now. They have provided a process that includes 2 regulated entities on both sides, in addition to the ATS. So now, I get that. That sounds very familiar as a public equity trade. So it's very important for us to be able to provide that environment, because I think not having that environment with the mist and the opaqueness was something that was a deterrent for people to participate, and rightly so. Misinformation or disinformation or asymmetric information, as Jake was saying, that was all reasons to not participate. With the venue, with the familiar aspect and flow of regulated entities on both sides, we're taking away reasons for investors to say no. And eventually they're going to be out of the reasons, and they're going to be forced to start looking at investing from an institutional perspective in these markets.
I have an interesting perspective on that, and I'm interested to hear both your perspectives on it. So my introduction to secondary market was back in 2003, 2002. I know you guys were young bucks just coming out of high school, but I was still an old guy. But in those days, we would hear about trades occurring, and you needed to be a ultra high net worth guy or person, I should say, or an entity, to be able to buy the shares of LinkedIn and Facebook and all that. So I'm only saying this is not so much as a challenge as I think it was there. There's a certain space that's been doing it now for over 2 decades. I could be wrong. You guys have the data. So that's one space. And then I remember colleagues of mine during the crowdfunding era. You may remember them, Jake, CFX, Jordan, and them. They started doing secondary market and for real estate equity crowdfunding. We all got excited, and they were going live, and there was an appetite. But when people found out how long this thing was going to take, whew, it died. Like I remember when we brought on a client, it for them it bringing on onboarding a client could take months, and that was just the client. Then they would have to. So there was one element that I think private market was hindered by, one, adoption, to your point, Elliot. But for those who already used to it and liked it, there was another problem with it, that the trade had to be big enough in order to warrant that lag of time. Now, we can shorten that cycle down dramatically, because with the introduction of technologies that could put everyone on the same framework per se to allow a transaction to occur. That's my perception of ATS. I got introduced to it very early on when I had my company Babblefish. I never had heard of it then. I was very young to it, and I remember when I went into it to use it, it didn't seem like an exchange. It was really weird. It was like a matching. And then when CFX was sort of like, okay, we're getting close. This has to be very different. I'm not sure if the word is familiarity for me at the moment, as it is. I want to sell now. I don't want to wait 8 months later. Does that make sense, Jake? I mean, you've seen this, right? You know what I'm talking about.
Absolutely, absolutely. So, and we do a lot of, as much as we hate to say, I mean, not everyone is as quick to adopt an alternative trading system. And so we do a lot of secondary transactions still over the counter. And so I can kind of relay that process to what we're doing on the ATS, and that, with a traditional secondary transfer, if I've got shares in company A that I'm looking to sell. Even once we find a buyer that is willing to buy my shares at a price that I think is fine, ultimately there's still a lot of paperwork and a lot of contracts that need to be signed. That can take days or weeks. And we have to send it off to the issuer, and the issuer typically has to sign off on the transfer of shares. And a lot of times they have the ability to ROFR it or execute a right of first refusal, where either they or one of their larger investors in the company has the ability to purchase the shares at that executor or that negotiated price. And so even on the over-the-counter secondary trades, that process, from the time that you have an agreement, in theory on price and size, that could take, a month, 2 months to settle and clear. Which, to your point, that's a long time, right? When you can sell your shares of Apple in 2 minutes, and half of that's logging on and trying to find out your password. And so the settlement time there is extremely large. And I think what we're trying to do here with the PPX ATS is look at each one of those friction points and see what we can do to minimize the friction and accelerate the growth. And accelerate that timeline. And it's by partnering with the brokers and having those trades routed, instead of being over the phone, by routing it via APIs and by clicking a button, right? And then it's by partnering with the issuers and then having the issuers who have worked with a transfer agent like yourself to, okay, well, as long as we know we're not going to violate any securities laws, or we're not going to be subject to public reporting requirements, you can approve the trade and the transfer, and that will help take time off the table, right? So if you're looking at every step of the transaction, it's where can we shave off days, where can we shave off time, and make this a more seamless process than the traditional secondary transaction today. Obviously it's not the New York Stock Exchange today, and it won't be tomorrow. But nonetheless, it's by examining it and try to dissect it to see where you can shave off time and where you can create those mutually beneficial partnerships to do so.
And 2 to 3 months that's offensive. 1 to 2 months, that is just offensive in 20. I mean, it's like we're sending like homing pigeons back and forth. And, as I hear you talk, Jake, it's one of those things where it's like, why does it take that long? And the answer, I think, is because of the lack of trust, right? There's no reason it should take 2 months to get okay, so it does. That's just the state of it. Why is it that the case? Because there's a lack of trust. I don't trust that you, as a private owner of X things, that you actually have what you say you have, and that you're actually going to say you're going to send the money, and that the issuer knows that you're going to sell your position and they have to validate it. It all comes down to a trust environment, or an environment, unfortunately, that is completely trustless, as proven by 2 months to get a trade done. What is now happening here with technology and using not the homing pigeons of prior past, but now 2021 technology, is that we're able to bring trust to the private market system, and with necessary groups like transfer agents, broker dealers, ATSs, we're able to provide that trust in an environment that lets investors share in that trust, and we can prove that trust. And that's what it all comes down to. And that's the exciting part, is because we're moving from a trustless environment to a trustworthy environment that could change this execution scenario from 2 months to minutes, true minutes, right? Like not where you actually have T+2 where you have to, send your custodian electronic stock certificates around each other. This is truly private transactions in minutes.
Yeah, I'm in agreement with that. And by the way, that's my trademark, but I'll let you use it in this context. So, hey, I don't joke around that. No, it's true. I think, one thing I've learned from watching the secondary markets, not particular PPX, because obviously we're all trying to make it more better and more efficient, is to look at all the participants all the way down the pipe, meaning all the way down. When you look at all the way down and you look at all the friction all the way coming down, and as you start recognizing where all the points are. And that's one of the things that we build in this infrastructure. I truly believe that we can, and I know we can, bring a transaction down to minutes. And I'm talking in, the money transfer, the security transfer, automatically update the cap table, portfolio, the new investor, boom, everything. Why? Because if all the participants, that's how the public markets work. Look, the other day, somebody was telling me, what's the difference between private and publics? Very simple. Get a phone, get an app. You can get any stock you want in any publicly listed anywhere in the world. Find me an app for private companies. Doesn't exist. That inherently is, and why? Well, I can build an app. It's not about building the app. It's about where do all these things sit. So Elliot, to his point, he can trust it. I believe we're there. I truly believe we are. It's going to take a lot of work. It's not going to be easy, but we have to, because if it's months or weeks, we're back to where we were 10 years ago, where CFX was, and then they became Open Finance, and they never, they changed the name, but they never changed the process, right? So we have to be better than that, and there's the technology is definitely there to get the broker dealer to trust it. Like some of the things that we're doing and our infrastructure to facilitate this is, if Wheel & Co. did the ID and AML on Oscar Joffrey, that's already been done by a BD. As long as that ID, and along with all the credentials that came with it, and it's put in an immutable form, it should be allowable to be trusted by the next party. And the only way that party will know that they can trust it is that they know that the only person that can vote on it was somebody of their caliber, the same level of licenses. And that, is the infrastructure of trust. I put in a plug. I haven't done that in a long time. But no, this has been a good conversation, because I think it's important that the takeaways is, look, there are going to be different flavors of ATSs that Jake and Elliot alluded to. That isn't important. The first questions you need to be asking the ATS straight out: are you an institutional or you're retail based? They're all going to say they're retail, but who do you need to go through? Because that's going to determine how your onboarding will need to happen in order for you to take advantage of their platforms. And but ultimately, to Jake's point, we're going to have many. There isn't going to be. I think this is the reality I want people to understand, and I'm glad you said it, Jake. There's going to be Carta, there's going to be PPX, there's going to be Rialto, there's going to be T0, there's going to be all of them. There's that many companies, people. 150,000 of them raise capital every year. I assure you, no offense to North Capital, you don't have all of them. Neither do I. So we need to understand that it's not a matter of whether one is better. It's what's best for you and the company that selected the path. And I think that's the way I look at it. Ultimately, wouldn't it be great if everybody worked together, all the secondaries one day, interconnect with each other? That would be awesome. That's it. We love to see that. Broker dealers do that. I know Wheel & Co., you guys like doing syndication. I hope I used the right term. But imagine doing that in secondary market where, you listed with PPX, but PPX then listed directly on another platform that deals with a retail investor. But because the ATS is an actual broker dealer, it matched your requirement. That's just me imagining. So it's been a great. So just a few minutes, Elliot, your words of wisdom. I'm going to leave it to last because you always have to. Wonderful words. So Jake, from your end, I mean, I never told you that it was going to be about PPX today. I hadn't done that before. I wanted to this time because I felt that other conversations we've had together, it's been kind of, talking generality, and obviously this is what you do best and you understand how the playground works. So your last words for everyone regarding the PPX ATS at North Capital.
Yeah, and first off, I'd like to just once again thank you for having me on, as always, Oscar. And I think moving forward, our goal is to create more partnerships, and to ultimately create a more open, accessible, liquid and transparent market. And I think if you do have securities that you're looking to sell, ask yourself, who did I buy them from? Did I buy them from a broker? And then ask your broker if they're tied in with an ATS, whether it's ours or another's. Or if you bought them directly from the issuer, I would ask the issuer, how can I, are you tied in? Are you listed on an ATS, or whether it's ours or another's? And it's really about having these conversations instead of kind of making kind of a lot of assumptions and relying on asymmetric information, where we've seen what that has caused in the past. And I think it's really about having these conversations and getting greater adoption in the market to help drive it forward. So with that, I once again really appreciate the time. Elliot, it's always great to connect as always. We'll have to connect here soon. And yeah, thanks again.
Elliot, please.
Yeah, I mean, just to summarize here, I think the secondary market activities through alternative trading systems is something that we get to talk about in 2021 as a reality. And it's taken close to 10 years to get here, call it 8, 5, 6, however we want to put on it. The thing I like to think about is, what is this environment going to look like in the next 5 years? Because that's the vision I think all of us are in the industry are looking at. And I do think that there is a chance that within 5 years, we can be saying that execution of Reg A plus positions in secondary markets through ATSs could be more efficient than publicly traded securities as we know it today, particularly equities. That's a real powerful statement, and one that I think we can stand behind in 5 years, given how quickly the industry evolves. We won't get there without partnerships, as Jake said. We won't get there if we aren't being cooperative and we aren't being collaborative in how we drive to that 5-year goal. But with the types of people that we've been exposed to, and that particularly Oscar and the KoreConnex team are building from a network perspective, it's full of very quality people who have great intentions, and each of us are proud to be a part of what's being built here. And so this is a key component of it. And in 5 years, I think we'll be having a very, very different conversation, Oscar, about what this environment looks like and where we came from and where we are going from there.
I couldn't disagree. I agree 100%. I'm with you. I did get something here that my last comments are going to be something you said, Jake, and you both said it. We kept using the word broker dealers. So for those listening in as an investors, obviously when you go to these investment pages under Reg A, obviously BDs make your brand visible to the investors. This is a new, obviously it's not only going to help you work with PPX, but it also gives that brand recognition to the investor to let them know who the BD is. The industry, like everything else, we're evolving, and with this new momentum brings different responsibilities. So in order for the secondary market to work, we need more transparency over here, where the investor is given full visibility. Not to say that it isn't in the Form 1 or any of the documents, but people are people. They don't read the 300 pages. So this really was a great takeaway for me. I wrote it down here. because I have an ecosystem meeting with everyone, and I'm a big believer in best practices. We brought in a number of best practices for Reg A, opt-in, something that nobody else was doing. We shared it with the industry to make sure to protect everybody in privacy. And the other one that we've been actually getting our clients to do is best practices in showing who their broker dealer is, who their escrow provider, the auditor, who their payment processor is. Why? Because this way you eliminate returns. This way, when they see in the statement that it came from this company, oh yeah, there it is. It's on the, all of that stuff is buried. And this comes back to secondary market. It's one more reason why they should do it. So thank you both. I really enjoyed this one. Again, and you're right, 2 to 5 years from now, we're going to be, all of this is historical on YouTube. So we'll be able to look back. We'll see what Jake said. We'll see what Elliot said, and we'll reconvene. But thank you again. And to remind everyone, on the 15th of March, we have a great event day, the whole week, actually, Monday to Friday. We have webinars, 2 to 3 webinars a day, but we're starting it off with called State of the Jobs Act 2021, featuring none other than the father of the Jobs Act, David Wield, with Sarah Hanks, and of course, being hosted by Vincent Molinari from Molinari Media, also known as FinTech TV. It's going to be a great day for everyone. And obviously, it's going to be great that we can finally say end-to-end, finally, after all these years. And we're just getting started. Thank you both. Have a wonderful afternoon, great week, and we'll be talking to you soon. Take care, guys.